Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and as Bitcoin.com reports, Moscow Stock Exchange prepares to trade cryptocurrency. And it's a little bit more extensive than that, so John, can you go into what is actually happening?
Yeah, it's not just a cryptocurrency exchange, as you might think. It's way worse than that. What you're looking at is actually, I'm going to quote what says here in the article. It says, "We are ready to organize trading in financial products for which there is a demand from bidders and from their clients, and which provide sufficient legal protection. On the stock exchange, it is possible to trade both cryptocurrencies themselves and derivatives on them, as well as trading stock exchange funds, so ETFs, on cryptocurrencies." So it sounds like you're gonna trade cryptocurrencies, but not really. what they're looking at trading here is derivatives like bids, option puts, and other types of derivative bets on Bitcoin, Litecoin, and other currencies probably, and also ETFs where they have promised you that they bought X amount of Bitcoins or whatever it is that they're holding in the ETF, and then you're supposed to believe them and you buy shares in the ETF, and that value, like the price, goes up and down.
Well, I would say even more so on something like Ethereum, which Russia has been quite a fan of. And it's interesting because this is exactly the worst thing that you can do. Because when you look at gold, for example, the amount of ETFs that were put out on gold. We've watched them artificially manipulate the price down for a long time. Now, the fundamentals will still be there with Bitcoin, just like the fundamentals are still there with gold. However, when you manipulate a market like this, that doesn't need manipulating because it's based on the demand and scarcity of individuals. Then what you are doing in the long term is actually creating a huge disservice to people who are in Bitcoin and who are in Litecoin or gold or silver. And obviously we watched as something like twice last year, Deutsche Bank was caught rigging the gold and silver markets. We watch as a price since 2012 especially has gone downhill with gold and silver, except for maybe in the last couple of weeks and at the beginning of 2016, where there's so much demand and value in physical buying of gold and silver that it brought the price up. But otherwise, it's been manipulating the price down for a long time. And the great thing about Bitcoin is it's decentralized and it's not controlled by the hand of man. And what they're doing is they're trying to find any way for people to trade in a way where they can have some form of control over it. And this is a huge problem, whether it's Russia, the United States, China, North Korea, who cares? This is ridiculous, and it's going to lead to some serious problems.
Oh, it definitely is. This is just their way of derivatizing and fractionalizing the whole system of Bitcoin. And what it is, they did it with gold. So what they're trying to do is they're trying to create a fake price of Bitcoin or Litecoin or whatever currency, or Ethereum, whatever currency it is, through these ETFs and through derivatives. They're trying to create that fake price in order to have control over the price. What you're seeing with gold and silver, they have control over what people think is the price, but I know what the real price is. I go and look at, for example, gold and silver, and I look at how much is the M1 in the currency or M2 in the currency versus the actual gold supply that that currency holds as, like, not backing, but holds in supposed secure location, or have, if they have it at all. That's what the real gold price should be. It's just not like the ETF price that you're seeing right now.
Yeah, just like in Bitcoin, you look at the market cap and you compare that to the value. And
it is super simple to calculate the real value of gold and silver, the real value of Bitcoin. It's so simple. So they're just trying to complicate it and trying to manipulate what they are telling us the price is, when the price is completely different.
And on a real free market, there is demand pulling away from this kind of practice, this shady kind of practice where people are able to say, look, we don't want these ETFs and we want nothing to do with it. And actually, interestingly enough, there was a huge argument about Bitcoin ETFs earlier on in this year. And eventually people said, no, we don't want them. And it needs to stay that way because we are manipulating something that the great thing about it is that it's not manipulated. Just like gold and silver is, it's precious metal, it's preservation of value for thousands of years, and then these idiots come along and start manipulating it. And on top of that, I do want to ease some people's concerns about this as well, because long term, we're watching a huge, epic crash in the stock market, even though it looks good now. We're watching a huge, epic crash in the fiat central banking system, even though to some it might not look so bad right now, but it's coming down. And when that comes down, the chains will break on the banking system manipulation of and government manipulation of these cryptocurrencies, just like it will on the gold and silver industry.
The problem here for the bankers, and the reason why they're creating all these ETFs, the derivatives and so on, is there's a finite supply on gold and silver. There's a finite supply of different cryptocurrencies. So that's the problem. So they can't just trade on a mass and make more and more and more money. They got to deal with whatever supply really is, and they don't want to do that. They want to go and create these derivatives in order to make more money on it.
And that leads us to this Business Insider article that I have up here. Hedge funds are cashing in on Bitcoin mania. There are now 50 dedicated to cryptocurrencies, and it just kind of goes into the fact that the market for cryptocurrencies is red hot, and dozens of crypto-focused hedge funds are looking to get in on the action. Digital currencies such as Bitcoin are powered by distributed ledger technology and are not controlled by centralized authority. The market for such currencies has exploded, with over 800 coins on the market with a combined market cap of $166 billion. Autonomous Next, a fintech analytics firm, released a list of 55 cryptocurrency hedge funds on Tuesday, illustrating the mounting interest in the space. Like wild mushrooms, crypto hedge funds have been taking root in the volatile and unregulated soil of the crypto economy, Autonomous Next said in a post on their website. So we went digging and digging and digging, the firm added. And it just goes on, but we'll go into that in a second. But just like an example of like Bitcoin, their market cap has surpassed Netflix. The Bitcoin market cap has surpassed PayPal, and it's nearing Morgan Stanley's market cap. So people that were saying it was a bubble a while ago, like Mark Cuban, is now getting in on it just a few months later. People that were freaking out about it, just less than a few months ago, are seeing the value in it, and they're flooding the market. And it also has to do with the fact that the stock market is going bust. People are flooding. I think there's $30 billion in 10 weeks out of the U.S. stocks. So
well, we talked about also the recent pop up in cryptocurrencies, of course, also because of a massive flood from the U.S. dollar on top of. So there's a lot of things going on there. There's a stock problem. There's the debt problem with fiat currencies. So you get a lot of people moving into this. Actually, I want to talk about crypto hedge funds because I invested in the first crypto hedge fund ever created, and it was Max Kaiser and Simon Dixon of Bank to the Future that created it. And I actually made my money back on it already, and I might make some money when they finally close the hedge fund. I don't know yet. But I actually made enough back that I actually covered. Plus, now, of course, Bitcoin went up. So I have, I at least tripled my income of my bet.
And Bank to the Future is still doing pretty well.
Oh, yeah. What they're doing in Bank to the Future is very interesting. It's a crowdfunding platform that Simon Dixon created that, of course, partnered with Max Kaiser and a lot of different things and has been on a show. Simon Dixon is putting out basically IPOs, you can call them, for different crypto businesses. And what they're doing is you invest in them. Anton Blanchard, our friend, he was on there. Shapeshift is another one that you might have heard of that has been on there asking for funding.
Shapeshift.
So it's very interesting though. What types of different things are popping up here. I'm not against the type that do crowdfunding to fund the businesses involved with the cryptocurrencies.
Well, I wanted to get into this with you, John. What are the upsides to this, and what are the downsides? Because I know there's a little of both.
Well, the upside is, of course, more of the side that invest in business side of this, because the blockchain technologies is the future by far, and it's going to replace a lot of
Decentralized.
Yeah, decentralization is going to happen. The problem, though, is they're going to use it also in the government sector with a lot of centralization on that side. But I
The
think
blockchain's the future in a good way and enforced in a bad way.
it's like a two-way thing. It's like the evil and the good in one thing. You could create horrible evil with blockchain, but you can create fantastic freedom with blockchain.
With cryptocurrency blockchain. Yeah.
So what we're seeing is, two different tugs of war here going on, but I wouldn't be against, investing in a lot of these crypto businesses that are doing a lot of different services within the industry, exchange. There's so many different things that you can invest in outside on just buying. Of course, the best thing is to buy the currency itself.
Yeah.
That's always the thing with gold and so on. It would be like buying a gold stock in a mining company or in a refining, something like that. So it's the same thing. There's a lot of potential here, of course, for the future. I think. With the technology, we're going to see so many great strides in the next. This is like an infantile technology still. Like, it was only created in 2009 when Satoshi Nakamoto created the blockchain system. So what we're seeing here is just, we're in the early stages of the Internet 2.0. And what we're going to see coming out of it is going to blow our minds. In my point of view, I don't even know what's going to come out of it yet. I know some of the stuff, smart contracts, different things that are going to eliminate expensive lawyers and expensive even real estate people and so on. So it's a great avenue of freeing up the market, creating a really competitive system. So I believe in that side. And then, of course, you got the evil side, the banker side that are trying
that's a centralized
creating
blockchain,
ETFs and derivatives on these things.
Oh, and that too.
That's the worst thing. Like, it's different with these hedge funds. They're putting in money into investing in businesses usually. But I've seen some also that are investing. Actually, the hedge fund that I invested in did Bitcoin mining, so I got dividends from the Bitcoin mining on it. So it's very interesting, structure and setup. But again, you let the bankers take care of and push the future of this. We're gonna see a lot of destruction coming up. And a lot of these funds that they're putting out going bust because it's built on air like nothing of real value.
But by fundamentals, Bitcoin is a beautiful thing. It's basically based on the idea of gold. So, for example, there's the scarcity and demand, which gold's value is largely based
the mining
on.
Supply. You always mine the coins with your Bitcoin miners, right?
Yeah.
So there's always supply coming out of slowly.
Yeah, and there's 21 million Bitcoins that will ever be created. So I think it's at 16 million right now, and it's halved and halved and halved, and we're looking at
2100 something is when it's gonna finally.
But that creates so much scarcity in the market, which creates a value to that on top of the value of people, owning it as an asset and a currency. So we're going to see a massive rise in the value of Bitcoin over the next few years. There's no doubt about that.
And people that are scared of the rise in the value, they say, "Oh, how am I going to buy Bitcoin?" Well, remember, it currently has 8 digits after its currency has 2 digits. So that's a huge benefit right there. But then on top of that, you can actually, I talked to the experts, you can divide it into 16, 32, 64.
Well, no, I mean, I think it's really simple. It's a really simple thing to answer.
It's super easy to transact if it's worth $1 million Bitcoin.
I mean, with dollars, you have dollars and cents. What are you basing that fiat dollar on? I mean, not literally what are you basing the worthless fiat dollar on, but what are you basing the numbers on? There's dollars and cents. You're not basing it on the yen. If the yen goes away, you're not going to go, oh, no, how am I going to know how much money I have in fiat bills? That makes no sense. When you look at Bitcoin, you have 1.001 Bitcoin, blah, blah, blah. You base it just in the same way as you base dollars and cents. You base it on itself. You're not going to base it on what the US dollar is worth. The US dollar, I mean, I get this question all the time, Joe.
Yeah, listen, so what the future could be is if some business or a grocery store or anybody chose to then, price things in Bitcoin, well, what they could do is they just say, okay, this, like bananas are worth 0.005 Bitcoins.
Yeah.
It's so simple.
Or bits or whatever. I'm
Satoshi,
sure
it's a Satoshi. Actually, like 0.0000001 is 1 Satoshi. So that's how it actually is. Instead of cents, it's a Satoshi. And that's like 000 and then 1 at the end, that's a Satoshi.
Anyway, we're getting really out of our field here. Anyways, I just wanted to say that Bitcoin, it's got the scarcity and demand. That's why it's so great. Centrally planned cashless system is completely different. It is basically banker control over you and government control over you via legal tender laws. So as I often say, if your money's in the bank, it's not yours, it's a bank's. And if your money's always going through the banks through digital transactions, through legal tender laws, through central planning, then you never hold it in your hand. It's never yours. It's always the banks, and you're in perfect servitude to the banks, which is exactly where they want you. So do not mix up the cashless system that's centralized by the banks that they want to push into the SDR with Bitcoin. They're very different. Blockchain can be used for good and evil, but cryptocurrency blockchain is different from centrally planned blockchain. It's as simple as that.
It's still the same, but it's centrally controlled in a cloud somewhere, and then it's like divided all over the world,
which makes it basically the opposite. But anyway, so we'll go into this further in the future, as we always do, and we have a lot more to talk about. So stay tuned for more here at WAM. This is Josh Sigurdsson and John Snyson signing out from World Alternative Media. Find the truth,
be the change.
Like what you see here at WAM, don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored by YouTube as they bring in the Anti-Defamation League to flag all of our content as so-called hate speech. Yeah, I know, it's crazy. Also, check our Bitcoin address in the description in the comments as well as on the screen for you to scan if you please. And don't forget to check me out at Josh Sigurdsson at Steemit.com. That's Steemit.com, the future of social media, where you get paid in cryptocurrencies, Steem that is, for your upvote and demand of your post. Until next time, check out this word from our sponsors.
Are you looking to exchange a large amount of US dollars? Don't overpay with the bank on currency exchange. Think outside the bank. Banks charge unnecessary fees of up to 3%. Truth be told, currency exchange with the bank will cost you hundreds to thousands of dollars. Start saving now. Step 1. Register online. Visit our website and click Get Started. Step 2. Book a transaction. Phone us for a quote and to complete the transaction. We'll need to know which currencies you are converting and how much. Step 3. Transfer of funds. Once you confirm the transaction, we initiate an electronic funds transfer from the account that you choose. Your purchased funds are then transferred back to you in the account that you choose within 1 business day. It's that easy. Start saving hundreds of dollars on currency exchange with CBCE. Sign up online or give us a call today.